Hustlers podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Capital and Appleman Group. Today we are joined with Chris Borden. Chris is a veteran executive with 30 years plus in finance, operations, and real estate. Chris has led a top Hawaii's real estate chain and now manages 6 real estate businesses and over $99 million in assets. Chris, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Well, thank you. First off, thank you, Josh, for having me on. Appreciate being here, hopefully sharing some wisdom and nuggets with the world. My background was in retail, so it was a weird transition. But I'm originally from Hawai'i, born and raised there. Went to school in California. Outside of that, been in Hawaii most of my life. Ended up getting into your typical corporate job. And worked my way up the corporate ladder to becoming CEO of a large billion-dollar organization, and decided it's been about 3 years now that we wanted to retire. And I think I got to update that intro slide. We're up to 28 businesses now. Which is crazy. That's what retirement life looks like. Just for everyone out there, when you retire from a corporate world, you end up working more than you worked in your corporate job. But It's been a phenomenal journey. And we're just loving what we're doing now. So that's kind of me in a nutshell, at least prior to real estate.
What makes up all the companies?
A lot of it is assets. We actually do a lot of philanthropy work. So for us, and when I say us, it's myself and my wife, we got more into real estate because, we retired for 3 days. And we said, retirement life is necessarily not for us. So we wanted to do something more, bigger, greater. And we got into more philanthropy work. I think 3 of our businesses are philanthropy related. Some of it is education. Some of it is, we have a nonprofit in Africa where we're trying to bring economic resources and opportunities to underserved communities there. Right now, we're concentrating on West Africa, but hopefully we can expand to multiple countries. And our goal is just to try to make the world a better place than it was yesterday.
Yeah, that's huge. There's a lot of needs in South Africa for sure. I think I had another guest on the show a couple months ago that was same endeavors. Your CEO role, so that's where you get your operations experience, which is huge. That's a transactional world. Can you tell us your experience on what led you to the top, and then the experiences and that you gained along the way?
That's a good question. What led me to the top? I'm gonna be honest. It's just hard work and dedication. That's it. At the end of the day, having a passion, loving what you're doing, and you have to have the reasons of why you love what you're doing. For me, again, we've always had that philanthropy outlook. It was me trying to make the lives of so at that time, again, we had a large billion-dollar company at about, I think at the time I left, we had 4,200 employees. So it was a larger company. And for me, it was about bettering the lives of our employees at the time. And that's what drove me to do better, to learn more. Always educate myself. It was one of those, if I look back, I don't regret it, but it was just one of those, I put in 100 hours a week, and people ask me, how do you put in 120 hours a week? It's just working 7 days a week, 14 hours a day, do the math. It comes out 14 to 16 hours a day, will come out 100 plus hours a week. And there was pros and cons to it. The con was I was not there as much as a father and a family man. I actually lived on a different island than my family as well. But they didn't look at it. It's a regret that I have, but when I go back and ask my family about it, their comment is, we know that you are working hard to provide a better life for us and a better life for your employees. So we understood it, and they took some of that into their own work ethic and life and led their lives the same way. So it's just about working hard. At the end of the day, I don't think there's no easy button for it. It's just you put in the dedication, show up, like we were talking about earlier before the meeting. Just show up and do what you say you're going to do.
Yeah, it's going to be hard either way. It's either you're working hard or your life can be hard. It's going to be pick your heart. So it's
I heard I can't remember who said it, but I heard a saying. easy choices, hard life, hard choices, easy life. So
Yeah.
you put up the work up front. And again, I was able to retire at age 42. Well, okay, we didn't retire, but I had the choice to retire at age 42. Chose not to do it. And it's still probably one of the better decisions we've made together.
$1 billion company, that's putting a lot of trust into one man to lead the force forward. Did you start at a certain position, learn the company, learn the ways, just working
Yeah,
the ranks?
I started, I would say, pretty atypical to a lot of retail CEOs. We started a lot of, if you go back and look at the story and history behind CEOs in the retail industry, they normally start at the bottom. I started as an entry level manager, but I quickly worked my way up. I scaled up. I think it was maybe 3 months, and then I was in a D-suite position. Um, Maybe 6 months. I'd have to go back and look. It's been a long time. It was 30 years ago. So somewhere between 3 months to a year, and I was already in a D-suite position. And I was in the corporate world for 27, almost 30 years. And you start off in entry level, maybe D-suite, and then you move your way up. You just learn through different aspects of the business. And then again, fundamentally, when you're looking at real estate, especially when you get into commercial real estate, at the end of the day, it's a business, and you structure it and look at it as a business, understand how the financing work in the finance works in a business, understanding how operations and marketing work in a business, and you honestly, at the end of the day, you'll be absolutely fine.
Yeah, that's spot on. It is. I think there's a huge misconception that real estate is passive, which there is a passive role, which is an LP, as far as going out there and buying it and expecting it to be passive. I think a lot of people do themselves a disservice because they realize that there is work involved in keeping up. It's like anything else. The more you put into it, the more you're going to get out. But it's just real estate's not passive. It depends on which role you're playing. But how
Yeah.
did you? So after your retirement, did you start looking into getting into commercial real estate, educating yourself, or is this something that you gain knowledge along the way?
No, well, yes and no. You sort of, in my role, again, it's retail, so you're dealing with commercial real estate anyway, right? It's brick and mortar stores. I mean, obviously there was a online component to it, but you're typically dealing with brick and mortar stores. So you've dealt with acquisitions, dispositions, triple net leases, double net gross, any type of lease concept that you can possibly think of, you've dealt with. We've done brand new construction in my career. So and again, being the CEO, I was involved in every single step of it. Through M&As, through again new development, where it's part of what we did in the retail industry. A lot of times people don't think about it that way, but there is a large component of real estate associated with retail. So I had that background when we decided to leave, and we've always invested in real estate. We didn't necessarily consider it investing. Again, I had a corporate career. My wife as well had a corporate career as well. And we bought houses and we had renters, but we never really put too much focus on it. I would say that was probably one of the biggest regrets that I have, is not putting more focus on, again, maybe my personal growth and finances in regards to that. Because again, if the earlier you do it, the more advanced, I mean, the more benefit you're going to get in the long term. Again, the real estate is a wealth journey, and it's not a get rich quick scheme. There's time involved in it. But we were sort of always navigating real estate, and when we transitioned to retirement life, we knew we retired for 3 days. After that 3 days, we're like, okay, we can't just not do anything. So we wanted to navigate real estate to just sort of do something passively. And honestly, I started, because I had a corporate career for so long, I started by just grabbing and picking up a hammer because I didn't want to sit behind a desk another 30 years. I wanted to get out there, get active, health wise, and just be able to do something different. So we started with a flip. My wife was to watch way too much HGTV. She was going to be Joanna Gaines, and somehow I was going to be Chip Gaines. And it lasted like half of a flip, and we decided, okay, wait, this is probably not the right route for us. We'll do it on occasion, but we'll do it just to relieve stress. Like I get to break a wall or do something and have some fun doing that. But we eventually, I would say the biggest component that I've learned in real estate is it's a people business. And having relationships and networking with people is going to be paramount to expediting whatever your journey is on how you envision, if you're getting into real estate, how you're envisioning that growth path for yourself. And we ended up just going to organizations, RIA events, or any different type of networking events that would occur. And we ended up meeting people and the one thing with real estate, I remember just talking to somebody yesterday about it, is there's a lot of shiny objects. There's a ton of shiny objects in real estate. So helping sort of downscale that and navigate what that looks like can be tough, I'll be honest. Especially, I would say we're new, right? Because technically we're into it now full time, and it's only been about 3 years, 2.5, maybe 3 years. And navigating that it's a real thing. And understanding how to navigate that. So networking with people and trying to align yourself with maybe interests that you have, or skill sets that you're really good at, definitely help. And then again, my background in operations and financing helped me navigate towards commercial real estate, and being able to look at commercial real estate, because again, at the end of the day, it's a business. So that was more how we navigated towards commercial away from. We bought a bunch of single family houses, which I'm trying to get rid of the last of my single family houses, because I'm not a gigantic fan of it. Again, it's just everyone's different. Everyone has their own nuances and likes and dislikes. I don't think there's any one thing that's right or wrong, but everyone's just going to be different in how they view time, how they view relationships, how they view capital. And in where we're at now, we want to concentrate more on helping people and be able to look at assets that we enjoy managing and running.
Yeah, I think single family houses are great for the balance sheet, but they're not moving the dial. They'll help you get there, but once you're there, then yeah, it's time to drop off some of the things that are costing more money than anything else. But
Yeah.
I agree. They help get the experience. So start small,
Yeah.
build a balance sheet up, and then graduate and don't bite off anything bigger than your head, so to speak.
Absolutely. Absolutely.
The journey. The journey is the way to get there. But you also have a lot of negotiating experience with, of course, where you've been, where you come from, and that is really a key component when it goes into coming into commercial real estate, because you're dealing with the seller and brokers. And if you could touch on negotiations and how you've elaborated on that experience.
Well, negotiations realistically is all about leverage. Whoever has the leverage has the power to negotiate. And you need to kind of understand where the leverage lies when you're negotiating, because in the negotiation, sometimes you will have leverage, sometimes you won't have leverage. And you can still negotiate either way, but you have to understand where the leverage lies, and then be able to navigate through that aspect of it. Typically, leverage capital is leverage. Looking at wants are leverage. Who wants what? How much do they want? What they want is going to be your leverage point. And again, understanding that will definitely help you be able to navigate that realm a bit more. When you get into commercial real estate, navigating that is little different from and again, every situation is different. I remember, so most of our stores, again, I mentioned we were from Hawaii. Most of our stores were located in Hawaii and California, in very, very desirable areas. So if you're on the spectrum, and we have to negotiate leases every 5 years, 5 to 10 years, we have to renegotiate leases. So depending on where you're at in the spectrum, if you're in a super desirable neighborhood, I mean, again, leverage is typically going to fall into the hands of whoever the property owner is. If you're in a less desirable neighborhood, maybe then leverage falls back on your side. So really understanding where the leverage key component stands will help you kind of navigate how to negotiate, if that makes sense. Hopefully, I'm kind of explaining that correctly.
Yet we've acquired properties that are always what I would consider a pain for. There's a pain point there for the seller, whether it's deferred maintenance, tired landlord, just ready to move on. So I think once you get into a different level of commercial real estate, where it's more of a strategy play, maybe a REIT or something, there's a lot of different. So
Yeah.
it's hard to pinpoint what the motive is, but there's a balance point. There's always a balance point you got to find for the seller and the buyer, and finding it the way everybody wins at the closing table. We've been fortunate to where everyone wins at the closing table and everyone's happy with the outcome, and that we haven't had to renegotiate to where there's a huge deficit for the sellers, or where we feel like we're not able to do it. But that goes on with experience too. The longer you're doing it, more things come up, more experiences.
Yeah, you're 100% correct. When you're looking at institutional level negotiations, it's completely different. Normally, there's really no pain points involved in that. But I think approaching it the way that you said is probably the right way to approach it. And I've gone through trainings where it is opposite to this. But I think if you're creating a win-win situation, especially if there are institutional investors out there, I would say, especially when you're getting to more institutional level, because if you're working with an institutional seller, they're going to have more properties, right? There's going to be more opportunities that come to fruition. And if you're looking at it at that standpoint, then you're going to want to make sure that it's a win-win situation. Now, on a one-off property, again, like when you're talking about especially some value add, old mom and pop operations, yeah, you're looking at that point, you're looking a little bit more for pain points, but you're navigating, it depends on the situation, and you're navigating through it differently depending on, again, it's understanding, at the end of the day, it's understanding where the leverage sits, and it's going to be different depending on what type of asset, who are you buying it from.
What can you tell us about working with brokers?
I don't work with too many brokers. Most of the deals that we've acquired have been off market through partnerships that we've had here in Utah. So I don't have too much experience working with brokers. We worked with a lot of brokers in my previous career, but it's just different. It wasn't the same thing. It was more triple net. They would help negotiate some of the leaseholds, and probably not as applicable to like acquisition. So unfortunately, I can't speak too much about the relationships with them. I know it's paramount to have relationships, just relationships in general, depending on the assets that you're looking at. So again, we have relationships with probably one of the largest commercial wholesalers here in Utah, and we partner with him when we're acquiring assets. In fact, we just picked up one, maybe a week ago in San Antonio, all through relationships that I never would have got if I didn't have the relationship. So regardless of who you're working with, as I mentioned before, relationships are honestly, at the end of the day, what's going to move the needle for anybody.
Yeah, maybe broker wasn't the right word, because if you didn't have a relationship with the wholesaler, that deal would have went to somebody else. But he knows you're a closer. He knows you're the guy. You can get it done, and he offered it to you first. And if you would have said no, he would have went to. So the relationship and building rapport and being who you say you are and doing what you say you could do. That's huge out there.
Yeah, absolutely.
What are some experiences that you've learned along the way that some listeners can gain?
I would say going back, I mean, I hate beating a dead horse, but honestly, the biggest thing is what we were talking about is just relationships. I can't like lead with your heart. Don't be sleazy. Lead with your heart and just try to do the right thing. If you try to do the right thing, and as Josh said earlier, do what you say you're gonna do, then everything else. I mean, obviously, educate yourself. I mean, that sort of goes without saying. Continuous education is paramount, but I think the biggest is just relationships. Do what you say you're going to do and be genuine with who you are. And people will see that. And people will see through that if you're not that. So try to work on that aspect of it and just be genuine, be who you are. And I like to just tell people, just lead with their heart.
What about a pain point that you felt that if you knew now what you knew then type of scenario, something that, you know, it's
Taxes
experience.
suck. That's what I can tell you. Taxes absolutely suck. And real estate is a game changer in that aspect. I just did a post. I had years where I had 6 figures in taxes. And this is at my W-2, and it's not fun when you see the tax bill. So I would say that's probably the biggest. If I had more of my knowledge that I have now, again, diving fully into real estate that I had then, I would be that. I mean, that would be the biggest thing, especially when like there's different phases of like your life journey. I said it before, you got foundational phase. You're kind of just building yourself, educating yourself. Then you got like accumulation of wealth phase. This is the part where like you're propelling in your career. This is the point that I was at. You're propelling your career. Maybe you got a side hustle. Maybe you pick up one rental property. But then after that point, you got like the preservation phase where you're trying to preserve it. And I wish I had advanced that stage much earlier, because I gave, again, you get into higher income, you're giving, and I lived in Hawaii, so we had a super high state tax. Almost half of my income was going to pay for my taxes. I don't care what, there's no other bill in life besides maybe your kids that are going to cost you half of everything you make. So it's not even a set amount. It's literally going to be half of what you make. So understanding that the tax benefits to investing, I would say, is like huge and paramount. Like if you are a high income earner, and hopefully, I mean, there's situations where you can and cannot do it, but if you can get that real estate exemption and be able to start offsetting your active income, maybe your spouse is at home and not working, she can go get a real estate professional status, and then you start buying, accumulating assets, wealth, whether it is, even if it's passively investing, you guys, there's still a bunch of tax benefits that you can have. And I wish that I knew that probably earlier. It's not a pain point now. It's a pain point when I look back at my life prior to introducing real estate into it.
Well, that goes to where energy goes, or focus goes, energy flows. But I mean, you're building a company, building your career. But if you could have started with real estate and had that knowledge, depreciation, exemptions, and so on and so forth, as you're building your career, man. But I totally agree. I totally get that. What about like a real estate deal gone bad, or you bought it, and you found out that the plumbing was terrible? You've got a huge portfolio now. I mean, something's happened.
Normally I don't, it's not a, I mean, you normally put things in place to mitigate that. Like you have property managers. You normally don't get too many of those calls. You get the calls where it's normally people, and you're always going to have issues when there's people in the mix. Someone didn't get along with this neighbor, or someone took someone's wrong storage, or something happens. We got a call where somebody was calling someone a vulgar name. It was like, it's a civil suit. I can't do nothing about it. So you get those, but it gets offset by the tenant that walks in and starts crying, that said, I never thought I could be in a place this beautiful and affordable. Because again, a lot of what we do is just trying to bring back and give back to the community. Or you get letters from tenants to say, thank you so much, landlord. This is the greatest place I've ever lived. Like they just offset each other. So there's pros and cons to everything you do in life. My wife always says, she did resiliency with the military. She always says, just hunt the good. Always try to hunt the good, and everything's going to be better. So there's not. Yeah, we get the occasional. I had a unit flood. We have an RV park. One of the units burnt down, but it's nothing insurance is not going to cover. It's just the impact that you make to people that honestly are the better things. No matter what, you're going to deal. You get into real estate or even any business, you're going to deal with stuff. It's just try not to focus on the negative stuff. Make sure you have plans to mitigate it, and then focus on the positive stuff to make your day just that much better and brighter.
Yeah, buying a property right, that helps offset any potential
There you go.
instances too. How are you all selecting the markets where you're buying your assets in? Is it growth?
No, so we're pretty agnostic on the markets that we look in. We have properties from, I mean, I gotta think it's all literally all over. We actually have properties in California, from California all the way to North Carolina, and almost everything in between. So we have, and it's different property types. I personally am a big advocate of diversity, and part of that diversity is geographical diversity. And you're looking at, and even the assets, we diversify between assets. We have, well, we don't have a storage yet. We probably will get one soon, but we have RV parks, single family homes, mobile home parks, trying to think, developments, single family development projects going on. So we try to diversify as much as possible, because you're going to diversify your risk geographically, and you're going to diversify risk between assets as well. And then we also do a lot of debt. I would say, if I had to guess, 70% of our portfolio is debt, which is, again, you have the way we like to, well, me personally, this is how I manage my personal portfolio. The way I like to look at it is same way any financial planner will look at it. We try to have a portfolio ratio, and it depends on where you're at. I mean, I'm a little older, but I try to have my portfolio ratio a little less risk assessment in my portfolio. So we'll have, I think my personal portfolio is like 68% debt. And when I say debt, it's normally first lien position debt on residential and commercial assets. And then we'll have, I don't exactly know how much is in equity, but I know we have about 4% in venture capital. So a little higher risk opportunities out there. And then the remainder is in equity stakes on. And we do both. We've done several LP deals, so we're limited partners as well. We've done a lot of co-GP and then the primary sponsor on different properties. And I'm still going to articulate or navigate my portfolio the same way. And that's what we offer to any investors that want to be able to invest with us. We offer them the same thing. We offer them on we basically set up our fund and our portfolio to be able to benefit ourselves, because we're investing in every single deal, every single debt deal, every single equity deal. I have my own capital, physical capital in it. So it's a way for us to be able to follow and preach what we say we're going to do, if that makes sense.
Yeah, no, that's alignment of interest for sure. I like that. Have you found one to be more fruitful than the other? Because you're in different locations, different asset types, so things are going to pop.
Yeah, right. I mean, they ebb and flow. A lot of our commercial assets, so we pick up assets differently as well. Some is on terms, some is through traditional bank financing. Everyone has known what's gone on with the interest rates. Well, everyone knows that interest rates are starting to come down as well, but interest rates have skyrocketed for a while. So we had to pause distributions, or if we're in deals, maybe the sponsor has paused distributions on some of the multifamily assets that we've had. Some of our vacation assets have still performed during this, because we have, like I said, we have properties that are on terms, which are not affected by interest rate at all. And then the debt side is pretty, I mean, it's fixed rate return, so you don't necessarily have to worry about it unless there's some type of foreclosure. And normally on the foreclosure side, when you're looking at debt, you're normally going to honestly make more money, but it's just a longer time horizon. So maybe your IRR is compressed slightly, but you still overall will make a higher return. But I would say overall, it depends on, for us anyway, specifically us, how we picked up the asset. If we picked it up on terms, if it was fixed rate, normally cash flow distributions remain. And then our the debt side of the spectrum, it's normally unfazed unless it's like a huge market correction. And for us anyway, we're at 60 to 70% loan to value, even if it did corrected historically in a short time frame, because all of our notes are short-term notes. It has never historically corrected to 30% anywhere in a short time frame. Obviously it has in a longer time frame, but it's never corrected that far in a short time frame. So it gives us the ability to exit out if we needed to, which we haven't had to do. So it just depends on, I would say, where you're at, the asset that you're in, and how you picked up the financing, the debt.
Got it. That's good. Where do you see the market going?
I'm always optimistic about the market. I mean, I'll say cautiously optimistic. We're always gonna, when we're looking at our assets, we're always gonna aggressively underwrite worst case scenarios. We're gonna look back at historical worst case scenarios and underwrite that to be the worst case scenarios. And when we're looking at, honestly, when we're looking at deals and opportunities, we try to kill it. If we can't kill it, then it's a good opportunity.
Yeah.
Right, through underwriting, through looking at the market. But I'm with what the Feds are doing, and I listen to CNBC almost every single day. But what the Feds are doing with interest rates coming back down, most analysts out there predict it to be a softer landing on the overall economy. Job markets is a concern. You see it in several areas too that had huge job boom, especially in Texas. You see that sort of residing a bit, but with what the Feds are trying to do, lower interest rates, right, to revitalize the economy, the jobs, I think we're going to start to see job growth again. And then again, every market is specific to that market. So take it with a grain of salt. I'm talking like globally, because you can have, even in a downturn, like if I went back to, because again, we geographically invest everywhere. You go back to the 2008 financial crisis and you look up Austin's market. Austin, again, it didn't happen this time, but in 2008, Austin actually grew through the financial crisis. So it just depends. Every single area that you're looking at is going to react differently depending on what's happening in the area. But I'm optimistic about the future, especially as rates are coming down. We're going to start to see more cash distributions coming to fruition. And I think that there's going to be the dichotomy between affordability and the prices and cap rates. So that's definitely going to be something to be interesting to navigate. But again, if you're in the right area, because affordability is going to be such a huge issue, if you're focusing on investing in affordable assets, maybe blue collar assets, you're going to have more opportunities. There's going to be more tax breaks. So I think overall, obviously, depending on what happens with the election, overall, I think we're going to, I mean, even regardless of what happens with the election, I think overall there's a positive outlook, I think, coming to fruition on just real estate in general.
Yep, no, I totally agree. Very cool. Chris, if somebody wants to get a hold of you, learn more about yourself, and possibly invest alongside of you, how can they reach out?
You can go to, well, you can definitely catch me on LinkedIn. I'm on LinkedIn. I'm very active on LinkedIn. So that'll be the first place to go. If not, you can visit our website, risecapitalinvestments.com, and connect with me there as well.
Awesome, Chris. Definitely appreciate your time today. Look forward to following you, and we will certainly talk soon.